traders, what up investors? Ken here from Dyslexic Investor, and thank you for tuning in for this fantastic video. Today we're going to be looking at GME and how you can lose basically $230,000 in about 27 minutes. This is, again, a very common thing that we're seeing with a lot of people YOLOing things on GME and a lot of smorgasbord of other stocks. But of course, GME is the one in the headlines. GameStop continuously been talked about extensively via the Wall Street Bets, and actually its own subreddit as well with the GME, the ticker. So really going to be diving into what could happen here, what potentially the outcomes could be happening here. But let's go ahead and just jump into the trade here. So the trade, fairly quite simple here. We're seeing a very large options trade come out. We saw someone purchase the April 16th. So this is like this month's expiration. They bought 1,470 contracts at $181.30. So that's a pretty penny here. So if we can create that duplicate order here, that is looking at a price at nearly $26.7 million. Okay, so if you just have $26.7 million underneath your table, underneath your desk, just raise your glass or your can and say Godspeed to them. Anywho, so with that, really, that's a pretty substantial amount of capital. Potentially, again, that towards the end of the day, so this happened at 3:30, so 30 minutes before the close, and you saw them actually get out of it, again, that 27 to 28 minutes later here for a slight loss to a certain extent. So how much did they lose? Pretty simple here. We're just going to be putting in the 181.30, which is the original price they paid per the options, and then we're going to minus that or subtract that from they had to get out at 179.75. So that makes it about $1.50, but we have to multiply that by how many contracts they had. So 1,470, that's 2,278 the move there. But of course, then we have to multiply that by 100 because that's how much the capital is, because again, one of those options per contract and that so forth. So that puts it down to $227,000, $850 lost in about 28 minutes. So it's a very small percentage overall, that $27 million percentage, but it is still $227,000 that you just kind of donated to the market, and really potentially see how this play out. In that case, unless this is the options chain is not updating here correctly, because you can see here the volume here on the particular options chain here. Again, we're looking here on the April 16th, so 15 days away. Of course, if you remember, the market is closed tomorrow, ladies and gentlemen. So you can kind of see here, the bid and the ask was pretty wide here, and I was actually quite impressed that they were able to liquidate at those levels. Like, again, like this is just a very swift order, and most likely the market makers had to jump in there to accelerate this, because again, knowing on how many people actually own the $12 calls, it could be very low. Again, this could be a potential hedge. This could be someone actually selling these calls and then getting out at a different level, or it could have been two different scenarios. Again, the option chain does not really clearly dictate where it could be going, because again, we don't know the intentions on the trader, the fund behind this particular trade. So as of, again, markets closed tomorrow, but on Monday, if the open interest climbs to plus that 1,470 here, so basically looking at nearly 2,000 contracts, that would be meaning that is still settled, or they somehow got back into it. So it definitely one and interesting to watch. I thought that was kind of a weird trade. I think maybe the way I would look at it is someone was potentially thinking a move higher here, so we can go into a smaller time frame. They were just hoping for like an end of the day, end of the week, going to the long weekend kind of a bid. If we go in, let's go to the 1 minute chart here. We're going to go really insane here. You can kind of see here, they got in around that 1530 here, but then again, what did that cause? That kind of caused a big dip, and then it kind of maybe ran back up into the market. Again, they got out just nick of time. They got down a little bit lower. They would have lost more, of course, because again, we can look at how much they could have lost if they literally got out at the low. So let's go back into the trade here. Let's highlight this particular options here. We're going to send that to the grid, aka the charts, so we can see that price here. So we can see here the volume doesn't really do the best. So that's 17. They paid 181-ish. It actually got down to 175, so they could have lost almost another 200K on it, but they got out at a reasonable price at 179-ish range. You can see on that very large volume spikes here. How do I go here? There we go. Yeah, so this shows the amount of volume that we're seeing kind of come through here. Let's bring this down to the 1 minute chart. You can see that 1,400 contracts coming in there, and that buying that movement into that very aggressive movement there coming into the end of the day with that very compelling YOLO kind of play out there. So this is the one I'm not going to be like following the trade here, because I'm not going to be able to have my account capitalize on that amount, but it's just an interesting thing to see. Wanted to highlight it and share with you folks here. Looking at GME as a total stock here on the daily chart, this thing, it's kind of meandering. It's not really doing next to anything. I had a couple of the folks in the Discord. If you haven't already, the link's down in the description, and you can completely join the Discord. We're sharing some interesting stuff on people really doing interesting stuff on the GME stuff of like reporting very extensive losses. Again, they're really YOLOing things out here, buying like the 416 $800 call, and again, that's the same option expiration, but the theta decay on that is going to be astronomical. The theta decay on the $800 call, are you insane in the membrane? Let's go here. Let me close this. $800 call, scroll all the way down here. So that's the highest call that you can get on that option expiration. And look how much open volume and open interest at that level. I'm just going to speculate here, most of that open interest is most likely hedge funds or larger traders with larger accounts that are just selling premium. They're just collecting that premium. They're potentially selling that call option. You can really see that here. Look at that really kind of, again, 700, 650, 600, these really round numbers, 500, really seeing a lot of actions, but you're seeing a lot of volume traded on today here on that really large contract. So are people being sus about here and really seeing this potentially rocket ship higher? Because again, that is the next monthly options that we could go out for, and that's basically $1 contract. That's what you can buy 14 contracts with that with your stimulus check. So people are doing that. I don't know what they're doing, but I need people to quite understand here. If you're looking at this contract, you're really not saying you can't make money off of it. Again, everything comes down to numbers, and options. So what we can look at is, so looking at the options, so I use Tastyworks for my trading account, and we can look at the deep dive of what that option would look like. So if you would purchase that option at the $1-ish, again, if you put your stimulus check in and you wanted to buy this YOLO money, the delta is at 2.77. So it's basically saying you have like almost a 2 to 1% chance of it being in the money. But if the stock moves anything as drastically as it could, you could make a lot of money. Yes, but the risk to reward is very, very low, because again, that option's so far out. The option is only 15 days away. So the thing that's the huge kicker here, so again, the option's only going for $1, or let's just call it $1, and the theta is 24. So basically, if the stock does nothing for the next 4 or 5 days, this option will probably go to under 10 to 15 cents by next week. So that's how fast that theta will kick if the stock does nothing. Yes, the IV and the implied volatility is extremely high in that option, or that whole the whole stock as a whole, but this is still very, very much gambling in my sense of buying these large out of the money calls, especially in a stock that is really has been kind of doing next to nothing, even though GameStop has seen a short squeeze and kind of going through. Unless there's going to be some kind of great awakening and seeing it rocket ship higher, that's what could be looking at. But being mindful of the probabilities, I have to stick to my guns and my the probabilities of things happening. Which again, I know it's 1 in a million that this could have happened in the short squeeze. Da 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 da. But as of the news is out, the cat's out of the bag, the genie's out of the bottle, whatever you want to call it, everyone kind of knows about GME now, okay? The stock, it closed up $1.63. Wonderful, fantastic. Can it go higher? Sure, I think it can. We are seeing a little bit of a bouncing pattern here. We're seeing it kind of trending above the 21 EMA, so that 175 would be that short level of support. We've already had earnings behind us. Is the move continuously going to be going higher? There's a lot of questions that need to come down to. Are the apes, are the people that are going to be holding this going to be able to withhold and just continue to keep the stock afloat in that sense? Is there going to be a new catalyst that's really going to be driving the stock higher? Again, we just had earnings coming out that was one of the largest catalysts that you could potentially look at, unless there's still an unknown lurking catalyst that we could see come out. At the same time, that 21 EMA, so around 177 to 175 is your short-term support, but we could easily come back down to the 50-day, which is around that 142 to 150. Sorry, 141 to around 144.55 dollars on that price level there. So I have no position in GME. I hope and wish people very well that do have a position in the stock. I know it's very difficult. Even Deep F and Value did an update. He lost, I think, like 400K just today on the stock options that he had. But he's still holding. Again, it's really going to come down to those three things of, are people going to still continue to hold and not have paper hands? What's really the catalyst that's going to be going forth? And with that catalyst and with the first notion is, how long can people withstand this and really seeing how this plays out? Could this be another short squeeze and it rockets up to 600, maybe 750, 1,000, 1,200? I don't know. I really don't. I wish I had the crystal ball and I can tell you, I know we can all make a lot of money, but we just don't know, right? That's what makes the market. That's where you have to put your chips on the table, place your bets accordingly. So the really caveat is seeing all those people that are putting in, literally probably leveraging their accounts and buying into the stock with just with stock, leveraging their stock account, and then just really putting 100% of all their capital into the options is, I believe, the wrong thing. I consider that more on the thing of just playing the lottery and really just kind of not giving yourself the best chance to succeed. But that's just my opinion. If you like it, hit the like and subscribe. If you don't, hit the thumbs down, and I'll see you later, folks. On that note, you guys have a fantastic day, and hopefully we'll see you on the next video. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.